is exhilarating. It at least gives a sense that probably the worst of mayhem is over. Probably. We'll have to wait and see. Morning, both of you.
Hi, Lata. Morning. I'm happy whether the market moves up or down. It doesn't matter to me. But yes, for our viewers and for our investors, today will come as a bit of a relief, perhaps, at least in the early moments of trade, because of the fact that the global cues have slightly stabilized. So after 6 days of consecutive declines in the US markets, we've seen a big move, but it was quite volatile overnight as well. And by the end of it, the Dow saw a 4% move. A couple of reasons. One is that the New York Fed president has made a statement saying that the September rate hike is less compelling. If we didn't know that already, I mean, now there is, a chance that the rate hike will come in December and not in September. Also, there was a selling of the safe haven assets and a move to risky assets yesterday. You saw it in the US 10-year bond yield as well, that went back to that 2.2% mark. So that's a positive. And then there was some positive data that came in from the US. But for our own markets, Lata, it's been a very weak August series, and there was selling that continued yesterday. So, the FII sold about 2,400 crores in the cash market, and totally in August, about 13,000 crores was sold. So, given today's cues, we have expiry today, so there'll be a lot of volatility. How are you reading the global setup?
It does look like the global central bankers are now seriously worried about the manner in which markets have panned out. And there is a move not just by Bill Dudley to calm markets, but Kuroda's, the BOJ governor's statement this morning is also soothing nerves. Yes. The statement he made is that there is no reason to be so pessimistic about China. And that certainly will, coming from a BOJ governor, will be taken very positively. Now, he also said that perhaps a Fed rate hike would be good. Now, statements like this also calm nerves, that the market need not get overly excited even about that event. Coming from Kuroda is a statement to calm markets. But as you say, we have to really wonder whether this markets bouncing like a rubber ball is necessarily going to mean, that the worst is over. Yeah. Because this could very well be a dead cat bounce, whether it is the US bonds or whether it is stock markets. A 600-point rally after losing over 1,000 points, and all that packed into a day, and preceded by so much of intraday volatility. It doesn't speak of a patient returning to normalcy. This is still an extremely volatile heartbeat. Yes. And the patient is still in ICU and bears watching. It doesn't look like the markets have completely overcome the jitters of the last few weeks, especially coming from China. And I think India is in a particularly vulnerable spot. If the FII selling has been so consistent, it's not a one-day selling, or it's not an expiry-related selling. It's not, one event-driven, a one-off selling. Now it is repeated over the whole month. Yeah. So whether it will reverse all that quickly, we will have to worry. And then, of course, the intraday pressures are going to be there. Anuj, what's the sense you're getting? Expiry today, at least because of that, close towards 7,900 is likely?
Morning, Lata. I think you hit the nail on the head on two counts. One is that when the markets, developed markets, keep moving like 600 points up, 1,000 points down, that's not telling you of any kind of stability. Yes, all it's telling you is that short covering bounce is quite possible. The other thing is, when central banks and governments start talking up the market, something is wrong with the market, and that there's a risk of a meltdown, and that is the risk that, while nobody wants to talk about, nobody is comfortable talking about, in the equity markets, you have to be prepared for all kind of risks. And right now, the risk is a meltdown. A 2008 kind of meltdown risk is genuine, and it is real. You can be in denial and saying that no, it's only a healthy correction and the market will move on. The market is not obliged to move on after a 10 or 15% correction. It can fall more. For today, of course, it's the bulls will get a big breather, because as you can see, overnight there was big rally in Wall Street. As you could see in Asian markets, there's a big rally in Asian markets. There's a good chance that Europe also will open up, because Europe ended when the US market was still volatile. They didn't get to participate in the last 1 hour of trade when the US market really had that big rally. For me, the big question is, actually there are two big questions. One, will the gap up sustain in today's trade itself? And secondly, what happens in the September series? Because August, of course, today is done. In that, I think the kind of FI selling that we have seen in cash market is quite worrisome, 2,300 crore, and more particularly in the profile of stocks. Yesterday, for example, HDFC fell another 4%. And there was 700 crores of delivery-based selling in HDFC. Now, stocks like HDFC don't see this kind of delivery-based selling unless there's a view that, okay, this is a market in which we need to lighten our positions. So that's something that I'll be worried about. For today, what's the technical factor that's important to watch out for? A lot of call selling has taken place between 8,000 7,900 by aggressive base, even at 7,800.
So that becomes a ceiling for now, for
no,
sure?
that becomes a point at which if for today morning, of course, the start would be at 7,850, maybe even 7,880 thereabouts. What that would do is that would force people to cover their 7,800 call positions on the sell side. Some of the aggressive bears who sold the position at 7,800, they'll have to cover. The last premium was 50 rupees. That will surge to about 100 rupees thereabouts, so you'll have to cover that. Then if the Nifty starts trading above 7,900 through the morning, say it's till about 11 o'clock, 10 to 11 is normally the cutoff period. If it keeps trading above 7,900 through that period, then you can expect another incremental 50 to 100 point short covering bounce towards 8,000. That's possible. If, however, the Nifty does not trade above 7,900, has a gap up, and that gap up is sold into, and the gain for the Nifty is reduced to 40 or 50 points in today's trade, in that case, again, the bulls would again start to question that, okay, is this rally also fizzling out? Do we need to, bail out? That then will become the problem. So for me, the crucial level would be 7,900 in the morning. For how long the Nifty trades above or below that. That will decide the second half of trade today. But really, as I said, it's immaterial. The expiry can be at 8,000. It can be at 7,700. It's not going to make too much of a difference. The big issue is what happens in the September series. In that, you do get a sense with the kind of short rollover that we have seen, especially from FIIs, you do get a sense that there's still a bit of a negative view. You still get a sense that this market has still not made a bottom, and maybe 7,400, 7,500 is something that the market may have to go to make a durable bottom. That's the sense I get looking at the data. Of course, I could be wrong, but for today, 7,900 would be the key level to watch out for. A lot of mid-caps will see short covering today, and it will look like the worst is over for some of these, but that would be essentially just short covering bounce, no more and no less.
There is also another event between now and next week, between now and the September season. That's the Jackson Hole meeting. Now, to be fair, in Jackson Hole, you don't have Yellen attending and you don't have Draghi. But Stanley Fischer is there, and on Saturday afternoon, if you please, the session itself ends by lunch. So the last session on Saturday, which is the big session, you have Stanley Fischer, Mark Carney and Raghuram Rajan in a panel. Now, these are, of course, not televisable. It's a closed club. But you are going to get reports, because this is a public event, from that. That could also be an event where, we could get some statements from people who know how these financial markets have worked over several cycles and whether they see too much danger. I take your point that when central bankers have in the past said the markets have not necessarily gone in the direction that the central banker has intended. The most famous statement, of course, was Greenspan warning of irrational exuberance all the way back in 2001. And you know that the monster rally actually started in 2003 and there was no stopping it, no matter what Greenspan said. And he was one of the most respected central bankers of that time, no matter what you speak about him on hindsight. Markets didn't bother. So likewise, on the way down as well, even if the most respected voices, and Rajan would count among the most respected voices because of his ability to have seen the 2008 crash, I still expect that that could be a market-moving event. What happens in the Jackson Hole event and what is said by Stanley Fischer, Mark Carney and Raghuram Rajan. So that's an event the market should wait and watch out for. Exclusive for you on CNBC. That's one of the only cameras in that spot.
All right, but give and take everything, this has been quite a weak series for us. So the Nifty will go home with a 7% cut in the August series, and the Bank Nifty is down almost about 8% odd. And we were talking about the FII sell figure yesterday of 2,300 crores, not just in HDFC, where there was big delivery-based selling. Even in names like Infosys, there was almost 500 crores of delivery-based selling yesterday. So these are a couple of heavyweight stocks that you need to keep on your radar. But here's what you'll get to see on the show this morning. Lots of market talk lined up with Nitin Jain, the Principal Investment Manager at Kotak UK, and Jyotivardhan Jaipuria. So all that market talk in just a bit for you. Yogesh Radke, the Head of Quantitative Research at Edelweiss Securities, will tell us where this series is likely to expire and what the important strategies could be for the September series. Not just that, more talk on the currency space. Sameer Goel, the Head of Asia Rates and Currency Research at Deutsche Bank, will join in to track all the currency-related macros for you. And top trading strategies, as always, lined up with Sudarshan Sukhani this morning. Okay, first up, let's tell you about the US markets. After 6 days of a decline, we've seen a bit of recovery over there. Not a bit, actually. It's been a 4% move that the US markets have seen. Two main reasons for that. One, the durable goods orders data was quite strong. And second, more importantly, the New York Fed President William Dudley said that the September rate hike is now less compelling. So most believe that the first rate hike will come in December. Here's CNBC's Hampton